Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Today, we are going to focus our attention on some of the sectors which are going to benefit from tomorrow's budget. Now, India stands on a cusp of a transformative economic leap. Budget 2025 is poised to unleash an unprecedented wave of capex expenditure. This is just not about balance sheet numbers, but it is about reshaping the very fabric of India's economic future. Today, we will dive deep into the heart of this capex revolution. We'll uncover how a 11 to 12 lakh crores of capex allocation is set to ignite growth in various sectors, from cutting edge semiconductors to green energy frontiers, right? So we are not going to stop at superfluous words and advertising data. What we are going to do is we are going to dive deep and reveal the companies who are going to benefit, who are at the forefront of this seismic shift, right? So which is going to be backed by hard data and some rigorous analysis that we have done at our end. This is not any recommendation of stocks, but it is going to help you understand how companies, which companies are set to benefit because of budget allocations, and which companies are set to redefine India's economic framework in the years to come. So let's begin. Before we look at the sectors, we will discuss some economic numbers which will help you get context and understand why many experts are of the opinion that this budget will see capex revival. Now, India's GDP growth is expected to be in the range of 6.4 to 7% for the current financial year. The economic survey report was out today and it gave a number of 6.4 to be the GDP growth for this financial year. Now, this growth is at a 4-year low thanks to weak manufacturing and investment, and that is why a revival in capital expenditure spending is a must. Right, the fiscal deficit target for the country is going to be set in the range of 4.5 to 5%. Many experts are of the opinion that this year the capex allocation is going to be 10 to 12% higher than the previous year. This amounts to a figure of 11 to 12 lakh crore rupees. So, which sectors are going to be in focus when this capex spending is going to be done by the government? There are sectors like semiconductor manufacturing space, defense, railways, wastewater management, green energy, AI are some of the sectors where government is going to focus its spending in this year's budget. So let us look at these sectors one by one. Now, before we go on to discuss the sectors and the companies that you should focus on if you think that sector is going to benefit from government spending, I want to tell you a framework of how you should start investing in these sectors, what you should look out for when you are filtering the companies that I take names of. Now, when you go through the companies and the companies that you think are worth investing, always remember that your target should be to make a diversified portfolio. Now, by diversified portfolio, what I mean is 40% of your allocation should be in companies in the sectors that I mentioned, which fall into the large cap category. 30% should fall in the mid cap growth category. Large cap will give you stability, mid cap will be for growth. 20% should be sector specific, thematic stocks. Now, some sectors like railways or renewable energy, where you think there is high growth potential and you want to put your money in it, not more than 20% of your allocation should go into such stocks, and then 10% should be for emerging technology stocks like AI infrastructure development, cyber security ecosystems, electric vehicle supply, and advanced manufacturing technologies. So remember this: when you allocate your funds, based on how the capex spending is declared tomorrow. Keep this portfolio structure in mind. How will you filter the stocks? There are so many companies operating in the various sectors that we will discuss today. How will you filter from those companies and decide which is a company worth investing your hard earned money? Now I will give you some screening criteria, easy screening criteria that will help you filter the companies and leave you with good investable companies. Like, firstly, check out for their quarter 3 results where profit growth is at least above 15%. Next, check the price to equity ratio, which is below 25% mark. Debt to equity ratio for companies which are which you think are investable should be below zero point 0.5, and return on equity should be at least more than 12%. So this is a easy screening criteria for you to decide on the companies. Firstly, we will start with the semiconductor sector. Now, this sector has already received commitments for investments to the tune of 1.26 lakh crore rupees. Some of the growth potential in this sector is they are slated to create direct jobs in the range of 85,000 jobs. Export potential for this sector is $300 billion by 2030. So, huge growth potential in this sector. Some of the companies that you should look out for in this sector are Vedanta. Now, initially, Vedanta had announced a JV with Foxconn, but with Foxconn's exit in July 2023, Vedanta is still saying that their plans for a semiconductor manufacturing facility are in place and they have tied up with other players. Vedanta is a listed stock. Tata Electronics has also set up chip manufacturing facilities in Assam and Gujarat, right? Some other companies which are unlisted that you should look out for are ISMC Analog Fab, IGSS Ventures. Also, companies like Amber Enterprises and Dixon CG Power are working in the semiconductor space. The next sector in focus is going to be the defense sector, with a huge focus of the government on Make in India and indigenous procurement of defense supplies. The target for this procurement from domestic manufacturers is set at 68% by 2028. The order book growth potential stands at a whooping 22 to 25% CAGR, and defense export target is set at $5 billion by 2025. So, some of the key listed companies that you should look out for in this space is Bharat Dynamics. It has an order book of $194 billion rupees. I'm sorry, as of financial year 2024. Solar industries, diversifying into integrated weapon systems. The 3 year sales CAGR stands at 28%. Now, Data Pattern is also one company which is making waves in the stock market and is operational in the defense sector. It specializes in defense electronics, and the recent price correction can be a potential entry point in this stock. Next sector that we will focus on is green infrastructure. CAPEX allocation in this sector is to the tune of 1.5 lakh crore rupees. Now, government has set a capacity target of 500 gigawatts by 2030 and 1800 gigawatts by 2047. Expected total investment in this sector is around $250 billion. Some of the key listed players in this space to look out for are Adani Green, which has a renewable energy portfolio of 20,434 megawatts, largest renewable energy company in the country. Good quarter 3 results as well. JSW Energy, diversifying into renewable energy projects. Borosil Renewable, India's first and only solar glass manufacturer, and 5 year returns are approximately 300%. Some other key players in this space are Tata Power and Vari Engineering. Vari Engineering has declared good quarter 3 results. Next sector is going to be railways. Now government has consistently emphasized on rail modernization and expansion. We can see and experience the improvement in rail infrastructure while any rail travel that we undertake, right? This trend is likely to continue in the 2025 budget. Now, some of the companies that you should look out for in this sector, which is going to get a strong boost, which is expected to get a strong boost in the budget tomorrow. Companies like Titagar Rail Systems, which is into wagon manufacturing and passenger coaches. Then BEML is also going to set to gain from orders of rolling stock and urban metro projects. Texmaco Rail Engineering, which is a manufacturer and service services rail manufacturer and service giving company for rail related products. Rail Vikas Nigam Limited, again project execution arm of Indian Railways. Ircon International, some specialized services like IRCTC and Container Corporation because of focus on freight logistics and dedicated freight corridors. Railway Finance Corporation, which is the primary financer of railway assets, is also a company that you should look out for. All these railway companies, please look out for those stocks in tomorrow's trading session while the budget announcements are on. AI, artificial intelligence, is also a sector which government cannot ignore. With the Chinese DeepSeek R1 directly competing with the American OpenAI, Gemini, Elon Musk's AI initiatives, countries and governments across the world are vying for a pie in this AI revolution. So our government also cannot stay behind. Look out for tax incentives, infrastructural investment, talent development, funding support, and collaboration encouragement in this space. Some listed companies like Tata Elxsi are operational in the AI space and can benefit from government announcements in the budget. Now, we spoke about various sectors. What do experts say about the probability of high allocation to these sectors? Well, some of the sectors that experts have listed, which could get high allocation in tomorrow's budget, are the defense manufacturing sector, semiconductor ecosystem, and renewable energy sector. Medium probability of allocation is in sectors of digital infrastructure, advanced manufacturing, and healthcare technologies. So, when you design your portfolio, I told you how the combination of various stocks should be large, mid cap, small cap, right? If your focus is short term, which is 6 to 12 months, the focus should be on companies with a strong order book and near term catalysts. If your focus is on medium term, target companies aligning with government self reliance initiatives. And for long term plus 5 year focus, invest in leaders of transformational technologies and green energy. So, with this presentation, we did not want to discuss or tell you about budget expectations. What Nirmala Sitaraman says is for every one of us to listen tomorrow. Based on what she says, we have given you a criteria for choosing stocks in particular sectors which she points on, and what outlook you should have in your total portfolio for those stocks. We hope that this presentation has provided you a multi-dimensional investment perspective, and it will help you build a structured, diversified portfolio with a probabilistic approach and budget-linked investments. Remember, this presentation was not a recommendation. Investments in stocks carry inherent risk. It is always advisable to do your own research before investing. Approaching a financial advisor for correct investment decisions is also the right way to go. I hope this video has given you a perspective about which sectors you can approach for short term, medium, and long term investing based on budget incentives. If you have any questions or you want to add any points which you think I have missed out in my presentation, I would be happy to know about them in the comment section. So please like, share, and subscribe to my channel for more such educative and informative content. Until next time, stay safe. Goodbye.